Hi everyone, hope you guys are doing great and studying for your examinations. Now coming to the second part, from question number 16, we'll start with what are the important questions which we can expect for the May 22 examinations. So coming to question number 16, what is a shelf prospectus, and state the important provisions relating to the issuance of shelf prospectus under the provisions of the Companies Act. So here shelf prospectus, we'll say that when we want to issue the same kind of securities within a period of 1 year, then we have a prospectus on the shelf, and then that will be called as a shelf prospectus, so that we don't have to issue a prospectus every time we want to issue the same kind of security. So that's called a shelf prospectus, and then we'll explain that you have to file the shelf prospectus with the registrar, the filing of information memorandum. Whenever if you have a shelf prospectus you issued on say 1st of April, and now you want to again issue the same kind of securities in say 1st of August, but there is some changes in the securities that are issued on 1st of August. So you will say that for that you will have to file an information memorandum. So for any changes that are there, you will file an information memorandum with the registrar, and the intimation of changes and the memorandum along with the shelf prospectus together, the information memorandum and the shelf prospectus put together will be called as your shelf prospectus. So all these 4 points you will have to write after explaining what a shelf prospectus is. Always remember, anything that you do within the company has to be filed with the registrar. A housing finance company is a finance company having paid up share capital of 11 crores and turnover of 145 crores during the financial year 17-18. Explain with reference to the relevant provisions and rules whether it is necessary for a housing finance company to file the statements in XBRL mode. So now think, which are the companies who are required to file the statements in XBRL mode? Then you have companies who are listed on the stock exchange, companies with paid up capital of 5 crores or more, companies with turnover of 100 crores or more, and any other companies which are covered under the particular rule. So these are the companies who are required to file, but there are always exceptions. You remember those 4 charts that are there. So it says that a housing finance company, banking, insurance, power sector and non-banking finance companies are companies which are not required to file the statements in XBRL mode. So you will say that a housing finance company is a company which is not required to file under the. So you will first have to explain. They want to understand that what do you know about the filing in XBRL mode. You have to explain what are the conditions and who are exempt, and then you have to give your answer. Examine the validity of the following decision of Board of Directors with reference to the provisions of the Companies Act. In an annual general meeting of the company having share capital 80 members present in person or by proxy holding more than 1/10 of the total voting power demanded for poll. Chairman of the meeting rejected the request on the ground that only the members present in person can demand for poll. So here what is the answer? So you will first say that if you have to demand by poll, then 1/10 of the voting power or up to 5 lakh equity share capital holding people can ask for a demand for poll, and they don't have to be personally present. It can be by personally present or by proxy. So here 80 members who are having more than 1/10 voting power are present in person and by proxy, and hence it's valid, and the chairman's plea that it has to be rejected is invalid. Mahima Limited was incorporated by furnishing false information. As per the Companies Act, state the powers of tribunal. So this is winding up by the tribunal. They have the power to wind up a company for false information is given by the company. So you'll have to write down that they can pass orders, it can direct liability of members to be unlimited, or make order for winding up or removal of the name of the company, or pass such orders as it may deem fit. But these are all extreme measures, and we always have to remember that when there are extreme measures involved, then the tribunal has to give opportunity of being heard, and after hearing the party only then they can take such extreme measures. So you have to mention that, yeah, you will have to mention that they have to be given a reasonable opportunity of being heard. Define the term deposit under the provisions of the Companies Act, and so you have to first define. So it is breaking the question. Please ensure that you read the question properly and don't miss out on any of the question that has been asked in the particular question, okay? And comment with the relevant provision that the following amount received by the company will be considered as a deposit or not. Rupees 5 lakhs raised by Rishi through issue of non-convertible debentures not constituting a charge on the assets of the company and listed on a recognized stock exchange as per the SEBI regulations. And the second, this non-convertible debentures raising a charge on the company and listed on stock exchange is something which is, what do you think, not a deposit, correct? So it's not covered, it's covered under the exceptions of rule 21C. 2 lakh received from T, an employee of the company who is drawing annual salary of 1,50,000 under a contract of employment with the company in the nature of non-interest bearing security deposit. So non-interest bearing security deposit, but the amount that is given here is 2 lakhs. However, the salary is 1,50,000. So if you're giving it up, if it will not be considered as a deposit if it is up to the annual salary, but if it exceeds the annual salary, then it will be considered to be a deposit. So this is a deposit. Last one, amount of rupees 3 lakhs received by a private company from a relative of a director declared by the depositor as out of gift received from his mother. So now a relative of a director can give a loan or can give money to the company, and that amount that has been given by the relative of director will not be considered as deposit. But there is only one important point here, is that it should not be out of borrowed funds, and he has to give a declaration that it is not out of borrowed funds. So here, because he is given a declaration that it is out of a gift received from the mother, then in that case it will not be considered to be a deposit. The authorized share capital of SSP Limited is 5 crores divided into 50 lakh equity shares of rupees 10 each. The company issued 30 lakh equity shares for subscription, which was fully subscribed. The company called so far 8 rupees per share. It was paid up. Later on, the company proposed to reduce the nominal value of share from 10 to 8 and carry out the following proposals. Reduction in authorized share capital from 5 crores to 50 lakh equity shares of rupees 10 each to 4 crores into 50 lakh equity shares of rupees 8 each. Conversion of 30 lakhs partly paid up shares of rupees 8 each to fully paid up shares of rupees 8 each by relieving the shareholders from making further payment of rupees 2 per share. State the procedure to be followed by the company to carry out the proposal. So now they've given all these details, but it is a theory question. If you realize that it was of 10 rupees and now they are asking only for 8 rupees, so they are converting that partly paid share into a fully paid share. So it is called as reduction. So there is a reduction in the share capital because they are also reducing the authorized capital from 5 crores to 50 lakh equity shares of 4 crores, correct? So here you will have to answer as to what is reduction of share capital, what are the different ways, extinguishing and all of those things, cancelling, payoff, all of those are the ways in which you can reduce the share capital. You will have to make a notice to the tribunal will give a response, and whatever is the response of the tribunal, the order of the tribunal will have to be published saying that this is the order of the tribunal, and then you will have to do the necessary filings with the registrar. So it's a theory kind of a question, and then you will have to answer that for this, these are the things that will be required to be done by SSP Limited. State with reasons. Coming to negotiable instrument, whether the following are inland instruments or foreign instruments. Ram draws a bill of exchange in Delhi upon Shyam, a resident of Jodhpur. So it's drawn in India on a person who is a resident in India, accepted to be payable in Thailand. So it will be a, what will it be? It's drawn in India and it's drawn upon a person resident in India, and it's only accepted to be payable outside India. So this will be called as a inland instrument. Ram draws a bill of exchange in Mumbai upon Suresh, a resident of Australia, accepted to be payable in China. So this drawn in India upon Suresh, who is a resident of Australia, but this is accepted and payable in Chennai, and hence it will be called as an inland instrument. Ajay draws a bill in California. Upon Vijay, a person resident in Jodhpur, accepted to be payable in Kanpur. Now here it's drawn outside India, it will be a foreign instrument. Mukesh draws a bill of exchange in Lucknow upon Dinesh, a resident of China. So here it's drawn in India but on a resident of China, and it will be a foreign instrument. Next, coming to C advances to B rupees 2 lakhs on the guarantee of A. C also has taken a further security for the same borrowing by mortgage of B's furniture worth rupees 2 lakhs without the knowledge of A. C cancels the mortgage. After 6 months, B becomes insolvent. So the principal debtor has become insolvent. C sues A for his guarantee. Decide the liability of A if the market value of the furniture is worth rupees 80,000. This is also a question which has been asked in your past exam questions. So basically यहाँ पे what is important is that he has taken a security worth rupees 2 lakhs. The surety doesn't know, but the surety has the right whenever he is paying on behalf of the principal debtor. Whenever the principal debtor defaults, it is liability of the surety to pay because they have a coextensive liability and his liability is the secondary liability. So here the principal debtor has defaulted in payment, so that is why the surety will have to make the payment. But when the surety is making the payment, going to the rights of the surety against the creditor is that if the creditor has any asset, whether the surety knows about it or doesn't know, doesn't matter. But if the surety, if the creditor has taken any assets as security from the principal debtor, then the surety will get the benefit of those assets when he is making the payment. So 2 lakh worth of furniture, but today the market value of furniture is 80,000 rupees. So here the surety will have to pay, instead of 2 lakhs entire amount of default, he will have to pay only 2 lakhs minus 80,000, that is 1,20,000 rupees. Radheshyam borrowed a sum of rupees 50,000 from bank on security of gold on 1st July 2019 under a clause that that the bank shall have a right of particular lien on the gold pledged. Radheshyam thereafter took an unsecured loan of rupees 20,000 from the same bank for 3 months. On 30th of September, he repaid the entire secured loan of rupees 50,000. and requested the bank to release the gold pledge with it. The bank decided to continue the lien until the secured loan is fully repaid. So here they are testing your knowledge. First thing is that banks, so you have to decide whether the decision of the bank is valid. Yeah. So here you have to remember there are two things. One is that bank have a general lien. So they have a general lien on bankers, wharfingers and factors, brokers, all of these people, attorneys of high court, they have a general lien. So first you have to write that who are the people who have a general lien, and they have a general lien unless they have a contract to the contrary, correct? So if they have a contract to the contrary saying that normally we have general lien, but in this particular case we are not having a general lien and we are having a particular lien, if they have that contract, then he can now not have a general lien. So here they have already have a contract saying that the bank will have a particular lien for the loan of 50,000. So now he has only a particular lien. Had this line not been there, then the bank would have a general lien, he could have held the gold. But since he has already agreed that he has a particular lien, once the 50,000 loan is repaid, then in that case the bank will have to repay the gold to give back the gold to Radheshyam. Surendra guarantees Virendra for the transaction to be done between Virendra and Jitendra. So again there is a contract of guarantee during the month of March 2021. Virendra supplied goods of rupees 30,000 on 1st of March 2021 and rupees 20,000 on 3rd of March 2021 to Jitendra. On 5th March, Surendra died in a road accident. So the person who is giving the guarantee has died. On 10th of March, being ignorant of the death of Surendra, Virendra supplied goods of rupees 40,000. On default in payment by Jitendra on the due date, Virendra sued the legal heirs of Surendra for recovery of rupees 90,000. Describe whether legal heirs of Surendra are liable to pay 90,000 under the provisions of the Indian Contract Act. What would be your answer if the estate of Surendra is worth rupees 45,000 only? So here, first thing is that there is a guarantee, and before the person, the guarantor, the surety is dying, before that they have already made transactions worth rupees 50,000. Now he has died and the parties are not aware, so there is no notice that he has died, and they have further transacted for a value of rupees 40,000. So what is the liability of the legal heir here? First is that when the person is dying, then the legal heirs are responsible for the transactions before the death. They are not supposed to give the notice of the death. If they are not aware and they are doing the transaction, then in that case they are not liable for the transactions after the death, right? There is a revocation of agency, revocation of guarantee by death, right? So that by death there is a revocation, so they are not liable for any transactions after the death. So for 40,000 which they have transacted after the death, they are not liable. Before the death, they are liable for the transactions which are happened. So if he makes a default of 90,000, then they will be liable up to 50,000 rupees and not more. Now the second question that's being asked here is that if the estate of Surendra is worth rupees 45,000, so here they in the legal heirs are getting only 45,000 from his estate, and if the liability is 50,000, they will be liable only to the extent of 45,000, correct? Now R instructed S, a transporter, to send a consignment of apples to Chennai. After covering half the distance, Suresh found the apples will perish before reaching Chennai. He sold the same at half the market price. R sued S and decide whether he will succeed. So here he has acted as an agent of necessity. There was a necessity. If he would have taken the apples to Chennai, they would have perished, and as an agent of necessity, he has decided to sell it at half the market price, and hence R cannot sue S. Ramesh hires a carriage of Suresh and agrees to pay 1500 as hire charges. The carriage is unsafe, though Suresh is unaware of it. So he is given it on hire, but the person who is giving it on hire is not aware of it. Ramesh is injured and claims compensation for injury suffered by him. Suresh refuses to pay. Discuss the liability of Suresh. So here there are two things. One is that gratuitous bailment and non-gratuitous bailment, that is one thing. But in a non-gratuitous bailment, when you're giving the goods on hire, whether you are aware of it or you are not aware of it, once you have given the goods on hire, and if the goods are defective, which causes a loss to the bailee, which is Mr. Ramesh, then in that case the person, the bailer, has to compensate him for the loss. So here, even though he is not aware, he will be responsible because the goods are given on hire. Had the goods not been given on hire, were it a gratuitous bailment, then in that case Suresh, the bailer, would not be responsible because it's a gratuitous bailment and he was not aware. It is a bona fide mistake. But in case you're giving it on hire, it is the responsibility of the bailer to check, and he will be held responsible. Mr. A of Delhi engaged Mr. S as his agent to buy a house in Noida extension area. Mr. S brought a house for rupees 50 lakhs in the name of the nominee and then purchased it himself for rupees 60 lakhs. He then sold the same house to Mr. A for rupees 80 lakhs. Mr. A later came to know of the mischief and tries to recover the excess amount paid to Mr. S. Discuss whether he is entitled to receive anything from Mr. S. So here Mr. A has appointed Mr. S as an agent. So here if he is appointed as an agent, he cannot, first thing is that, do anything which will earn him profit or make him interested in the particular transaction. So him buying that amount and earning a profit on that, then he'll have to repay that profit back to the principal, correct? He cannot earn a profit out of the transaction of agency, similar to what we did last year for partnership, because that is also agency, correct? So partners cannot earn profit. Similarly, agents cannot earn a secret profit when they are dealing on behalf of the principal. So in this case, Mr. A, the principal, will be entitled to recover the amount of profit that Mr. S, the agent, has earned out of this particular transaction of agency. Bhupendra borrowed a sum of rupees 3 lakhs from Atul. Bhupendra appointed Atul as his agent to sell his land and authorized him to appropriate the amount of loan out of the sales proceeds. Afterwards, Bhupendra revoked the agency. So, here whether the revocation is valid. So, we have to remember this is a very important concept which can be asked in your examination, is the concept of irrevocable agency. Agency can be revoked. There are different circumstances under which the agency can be revoked, but there is only one condition where the agency becomes irrevocable. What is that condition? That condition where it says that if the transaction is such that it makes the agent interested in the matter, in the contract of agency, then in that case the agency cannot be revoked. So, here he is given the agent an authority to sell the land. So, he is given work to the agent, but the agent is also interested in the deal, because once the loan amount is going to be recovered from the sales proceeds of the land. So, here because he is interested, the agency becomes irrevocable. So, always remember, when the agent is interested in that particular matter or that particular agency deal or transaction, in that case the agency becomes irrevocable, and no matter what, even if he is dead, the legal heirs cannot revoke the agency. Aarti is a wife of Naresh. She purchased some saris on credit from Messrs. Rainbow Silk, Jaipur. Messrs. Rainbow Silk, Jaipur demanded the amount from Naresh. Naresh refused. Messrs. Rainbow Silk, Jaipur Limited filed a suit against Naresh for the said amount, decided in light of the provisions of the Companies Act, whether Messrs. Rainbow Silk, Jaipur would succeed. So, here you will always remember, see, the contract is between Aarti and Rainbow Silk. Mr. Naresh was not a part of transaction. What is it called? It's called as doctrine of privity of contract. We have studied it last year, that the parties to transaction can sue each other. But here he is filing a suit on Naresh. Now, this question is a little unique because this is not a part of your module. But if you go to your questions after the particular chapter in your module, you will see this particular question. So, we will have to study this, because in case it is asked, then we should know what is there. But the concept of this this particular concept is not explained anywhere in your module. So, what we have to remember is that first is that if the husband and wife are living together, then the husband will not be liable if the goods purchased on credit are not necessaries. The wife is given sufficient money for purchasing the necessaries. The wife is forbidden from purchasing anything on credit, and the trader has been expressly warned not to give the wife anything on credit. So, these are the 4 points that we will have to remember and we will have to write down. In these 4 cases, the husband will not be liable. Any other case, the husband will be liable. Since the case given here does not fall within the 4 scenarios which are given under the exceptions, Mr. Naresh will be liable to Rainbow Silk. So, this is because it's there in the May 22 module, I would advise you to go through this question before your examination, so that in case it is asked, you know these 4 points. So, if Mr. Naresh has expressly told the trader or the wife not to go and buy anything on credit, or she's buying something which is not necessity, she's buying something which is luxury, then in that case the husband will not be liable. Okay. A rented his house to be on lease for 3 years. The lease agreement is terminable on 3 months' notice by either party. C. The son of A, being in need of a separate house to live, served a notice on B without any authority to vacate the house within a month and requested his father to ratify his action. Examine whether it shall be valid for A to ratify the action of C, taking into account the provisions of the Indian Contract Act. So, here if you are not an agent and if you do something on behalf of the principal and you want the principal to ratify the act, the principal can ratify the act. Remember the essentials of ratification that you studied, so it's on that concept. So, he can ratify the act, but what is happening here is that he is given, the agreement says there has to be given 3 months notice, but he is giving only 1 month notice. So, if the ratification is causing any loss or damage to the other party, then you cannot ratify the act. That is one point that is given, and the knowledge is being tested on that one point, that if the ratification by the principal is causing a loss or damage to the other party, you cannot ratify the act, since you are here terminating the agreement by 3 months, before 3 months, which is the agreed period. It's causing loss or damage to the person Mr. B who has rented the house, and hence the ratification is not possible.